And happy Saturday. Just gonna make sure everything's live like you have to do. I've got my phone here. I am not texting my friends. I'm checking the Facebook group so I can get to the questions that we had asked in the group. That thread blew up. Lots of good stuff in there. So let me just find that. If you are here joining me, thank you for joining me on this Saturday. I know it's 11:33, but I am still having my coffee. But if you are on the West Coast, it's still pretty early. You might still be having your coffee with me as well. I just want to create this space where we can chat. There is a lot of good questions asked in the group, and I want to be able to talk through some of these things because that's just easier with some of this more complicated ideas around accounting, bookkeeping, taxes, and business structure. But first, I want to say good morning. I'm Tiffany Bastian. I am the owner of Bastian Accounting, where we work specifically with photographers just like you. I'm the founder of this group. This group is just a tiny bit over 3 years old right now. I can't believe the growth that we've had in this group in that short amount of time. Created this group so that when you go on Facebook and you are looking for information on something related to bookkeeping, accounting, taxes, business structure, you actually have somewhere to go and ask where there is somebody who can answer your question, who knows what's going on. Because all of us do that, right? You ask questions in Facebook groups, and then it's like somebody will be like, this is my biggest thing is like, they'll be like, my friend's Uncle Sam said, Uncle Sam, bad choice, but whatever, said that you have sales tax for blah, 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 blah. They're not in the same state as you. They don't have the same business as you, right? So sales tax is different by state. A lot of these things depend on your business specifically, what you're doing, where you're doing it, And so I just want to create the space where you can ask these questions. And honestly, don't be ashamed. I know there's over 6,000 photographers in this group. If you have that question, I guarantee you more than one other person has that same kind of question, right? I'm going to answer those and tag them in the comments as I answer those. And if you are here watching me and you have a comment, question, concern, any of this, please throw it in the chat. I'm here. We can talk about it. I'll answer that for you. We'll start with Leah. I believe I'm saying that correctly. If you are here, please tell me if I am. If not, and I am not, I do apologize. So she said, I have customers pay a $25 deposit that is credited back to them through PickTime. They can use it to buy prints. I don't collect tax on this. PickTime charges tax when you buy something and handles it on their end, then pays me every month all the profit I earn. Is that okay? Do I owe sales tax on this $25? So one thing to talk about and kind of bring up is that when you use any of the gallery softwares, to my knowledge, the only ones that handle sales tax for you are PickTime and Pass Gallery. And that is not like they automatically do it. You have to select. And I believe for PickTime, it's like there's a certain percent they take or it's a higher fee. But then they will handle sales tax for you and they will remit and pay it, right? So in a case where you only have, maybe you're in a state, and if you don't know your sales tax laws, you can go to my website and on the top left, or go to Learn With Us and get the state-by-state sales tax guide for photographers, which breaks down every single state for you. You are in a state, say that nothing is taxable but physical prints, right? And so maybe then you use PickTime so that and let them handle sales tax on physical prints because you don't do anything else that's taxable in your state except for that. That's a really good way to do that. But if you're in a state where everything's taxable like Texas or I'm trying to think of other states that are like that without messing it up because I do not have them all memorized. That's why we have a sales tax guide. Let's say if you're like from Texas where everything is taxable, well then does it really make sense to pay extra to have them track sales tax for you and pay it for you when you still have to file and pay on your services and all your other stuff, right? So it's kind of structuring that. And we talk about that actually inside that QuickBooks for photographers course inside the vault. We go through all the scenarios like how to design your packages so that it kind of helps you track easier through however your sales tax laws are. So in your state. So anyways, to answer your question, Leah, that's exactly what you do. So they're paying that $25. You do not tax the $25. It's like if you sell a gift card. When you sell a gift card, the gift card is for $25, $50, whatever. There's no tax on it, right? But then and I always do this example, then you go to Target and you buy all the stuff you want and they ring it up and it's whatever plus tax, then you apply the $50 gift card over it, or in this case, the $25 prepayment over that, and whatever is left, the customer pays. So the sales tax is applied to the things it should be and the things, and then no tax on things it shouldn't be on the total invoice, and then that goes against it. So you're absolutely handling that correctly. And I just wanted to break that down and explain it for anyone who might have the same question, to kind of understand why. So I hope that helps. Again, feel free to go ahead and put anything in the comments if you have questions. I will take live questions over the thread questions in a priority order. I'm going to actually just pull this up so I can see you guys over here. Are you still with me, Darcy? I know Saturday may be a busier day, especially for any parents, but I thought maybe I could hop in here in a time that would allow you guys a different time to connect that wasn't during a weekday. Okay. All right. Hi, Ashley. How are you? Okay. Awesome. Oh, you know what? Oh my gosh. How fun is that? I love that you're editing. Maybe we should start doing I do have dreams for a podcast. It'll probably be called the same as this group, but I love the idea of listen while you edit. Maybe that could be the tagline. I know many of you spend hours doing that. Also, may I note, hours that you may not consider in your pricing, that you just think because you're in front of someone, they think that hour-long shoot that you just did is all that they're paying for, right? And we have to educate them on this stuff. All right. Next question is Karen. So I am going to tag Karen. Oh, Oregon, Darcy. So Darcy's like, no sales tax, thank God. You may have a question on here. I knew there was a question on here from someone in Oregon. I will get there. I'm going to tag Karen. It's always got to make sure the profile picture matches. I just hope that when I'm doing this, it brings Karen to this exact moment. I hope it brings her to this moment. It might just bring her to this whole live. I don't know. I swear, social media changes every day. Karen has a couple. She says, goodness, I'm so sorry. Okay. Karen says, what's the difference between an accountant versus a bookkeeper versus a tax person? This is a great question. This is an awesome question. So great that I'm actually going to do a blog post on this, but let's talk about that. So a bookkeeper is, first of all, an accountant. To me, an accountant is somebody who has a degree in accounting and they understand things. So I have an MBA in accounting, right? But you don't have to have anything specific. You just need to be experienced and versed in understanding how to do accounting. I would hope you've taken some accounting courses to understand that. But there's no requirement. I am an accountant. I consider myself an accountant because of that. I understand that's the basics of accounting and bookkeeping, right? What is a bookkeeper? Well, a bookkeeper is somebody, and this could be anyone too, who can basically bookkeep for you by keeping your transactions organized for you, your income and expenses, and categorizing things, right? So that's a super basic thing. If I were looking at these things in tiers, I would say bookkeeper is an beginning job. Somebody could be a bookkeeper and do all that if they understand the concepts of bookkeeping. Accountant is going to be somebody over all of this that understands all these things. And then she said, and a tax person. So let's even go deeper on this. So I'm an IRS enrolled agent, and then there's CPAs. So CPAs can only work in the states they're registered in. I am actually certified through the IRS because I took a 3-part exam that was business tax, business income tax, personal income tax, and ethics. And I take 73 hours of continuing education, but it's all in tax. CPAs take a 4-part exam, where a small part of one of those exams does address tax, but then they sort of can pick a path. If you think of CPAs sort of like attorneys, that there's just such a vast amount of things to specialize in. You know what I mean? That's why you see divorce attorneys or car accident attorneys. You see niches like that. CPA firms handle different things. A lot of them don't handle bookkeeping. Some of them do, but they have probably somebody on minimum wage doing the bookkeeping. What we do at Bastion Accounting is we do everything. We set up QuickBooks, we do the bookkeeping, we do your tax planning, we do your taxes. We do it all in-house because then we have a better feel for your whole scenario, and we have a relationship with you. Not where unfortunately, and you may have all, witnessed this at some point, is like you send your stuff to a CPA firm and they're doing your taxes, but they give it back to you and you don't know why you owed money. You don't know how you could have saved. There's no strategy. Maybe you did your own bookkeeping and you're not even sure if that's correct because they will just take whatever and put it in there. So, there is a separation there. I love having that we do it all under one umbrella here at Bastian Accounting, but it's hard for me to say. These are not interchangeable, but they kind of are. I think it just matters on the experience level of the person. Now, these were all like, what's a tax person? They should hopefully know all tax law and understand that and be able to do taxes. Now, you need to be, in order to do taxes, for someone to pay you to do taxes, most states require you to have some sort of license or registration in that state. I'm an EA, so I don't need that. But in New York State, you can't just go do somebody's taxes for money. You actually have to get like a renew. Every year you have to renew to be able to do this. And so there's some sort of credentialing with that. But an accountant has the overall knowledge of everything going on. And a bookkeeper is sort of like the clerical part of it, if that makes sense. We do all that at Bastian Accounting. Maybe the next question might be, well, what should I do? I would go with working with a professional who's going to help you with all those aspects, who's going to understand how they all connect. Because somebody does your bookkeeping here, or you do it, and then you take it to someone else and they do your taxes. They don't ask any questions. So how do they know all this stuff? You know what I mean? There's all this nuanced stuff in there. So I hope that's helpful, Karen, for that. But I am going to do a post on that. I just want to clarify it a little bit more. I do have a post on a CPA versus an EA. Excuse me. And I will share that also here in the comments, because that's something I feel like a lot of people are totally unaware of. Everyone thinks CPA is an accountant, and they're like interchangeable, and that's not the case. Just because someone's an accountant doesn't mean they're a CPA, and being a CPA isn't necessarily the best thing, depending on what you need. EA is all tax law, so I have a master's degree in accounting. I've been an accountant for 20 years. I understand all that, and I specialize in the tax law. And then on my team, I have bookkeepers. So you know what I mean? It's all sort of in one place where it's not usually. Let me just grab that link. And then, again, if you guys have any questions, Ashley, Darcy, let me know in the comments. And then I'm going to jump into the next one. Okay, Karen has another question real quick while I have her tagged, is what are the bare bone categories I need when I categorize things into QuickBooks? Again, we do have a whole template to download inside the Education Vault, inside the QuickBooks course. But I'm going to create something for you guys here, I think, as we're in quarter four. We're not going into quarter four. We're already here. But, you have to think about your profit and loss statement. This is something that's going to tell you your income minus expenses, which is your profit or your loss. And we always run for our clients every month, and we send them the P&L. We do it by month, so they can see each month as the year progresses compared to the prior months. How do you want to see that? There is no rule or IRS law or anything that says your P&L has to look like this. Your P&L is actually something that you're devising for your own overview. How do you want to see it? So for example, some of our clients, we have income, they may be in several states. So it's easier for them, and they want to see their income by state because we have school photographers, right? So they want to see how many schools are booking in all these different states. So that's how we do their income. There are some of our clients who maybe specialize in a couple things. Maybe they do wedding, engagement, maternity, and first 24 or something. So we break it up by which kind of shoots they do. So again, with your expenses too, you people will always ask, and there was a question about cost of goods. This may be answering that question too. What goes in cost of goods versus expenses? Well, cost of goods, and it actually in your case would be cost of sales, because you're not really selling goods, you're selling a service. But it's how do you want to see it? So when you have your income, then the next thing you have is your cost of sales. And this really should be the things that you couldn't make the sale without. So for example, how we do it at Bastian Accounting is that's where we put your second shooters. That's where we put your contractors. That's where we put your lab costs and things like that, because those are really associated with the sale. And then all your operating expenses are everything after that. And that's how you want to see it. There's, advertising and expenses, office and general admin, bank and merchant fees. If you get my business expense guide, you could look through that, and that goes really deep. It's free. I will get you a link for that real quick, but that it could be a good place to start, as those could all be your categories. Essentially, what that is I went through the categories that we have on our chart of accounts that we use for photographers, and then I created like sort of a PDF to go through what these are and which ones you can and can't deduct, because you'll be surprised at what you can't deduct. And I see some questions coming in. Oh, Karen's there. Karen, I'm glad you were here. This hair right here, seriously, this hair is driving me nuts. And it's backwards in the camera. So I'm sorry. Let me grab the blog I was talking about. Let me see. I think it's up here. The difference between an EA and a CPA. I'm going to link that in here so you guys can catch that. And then I'm going to grab the free guide, because this guide, you guys want the business expense guide. That's a really good outline of the expense accounts that you might want to create. So let me grab that. Here we go. I'll copy that here. So that's there. Karen says, do we need to do business taxes separate from personal taxes as a sole proprietor, LLC, with being the only employee? When I asked for a tax person, they said we just do it all together. Yes, that is absolutely true. When you are not an S corporation or a partnership, partnerships and S corporations have a separate tax return due on March 15th each year. The S corporation is a Form 1120-S, and the partnership is a 1065. What happens is those returns need to get done because the partners or the shareholder of the S corporation need to get something called a K-1. And if you're an S corporation, you get a W-2 because you're on payroll. And I have a free S corp training if you want to check that out on my website. It's under Learn With Us. But we want to get that information pulled from the business, so then it goes over to your personal return. So it still flows through to your personal return. It just goes through its own return. This is another reason why when someone asks you for a W-9, yes, you fill it out. Let's say you second shoot for somebody or something. You fill it out, but if you're an S corporation, you actually don't have to, they need to have the W-9, but they don't have to report on a 1099 because you have a separate tax return, so the IRS knows you're going to report it. Does that make sense? So everybody else has something called a Schedule C, which is part of, so it's essentially an added schedule or form that's part of your personal return, which then again still flows. So it's one form, it's going to have your income and expenses. And I kind of go through those in that expense guide that I just linked. And then that bottom number goes over to your personal tax return Form 1040 on a line. But when, again, I talk about this in the S Corp training, that's free. So go check that out on bastionaccounting.com. But it basically, you pay 15.3 self-employment tax on everything too. And they're just treated very differently. But for taxes, S corporation is the only, and partnership is the only time that you have a different tax return. Everything else is still all involved in your personal return. And when we work with clients, we handle personal and business either way. And I am toying with the idea, and if you are interested, just let me know below. I'm kind of thinking I might open up a bunch of seats for not, because we have monthly clients and I do all their taxes and tax planning and all of this. The girls do their bookkeeping. We take care of the whole thing from beginning to end for them. We track their contractors. We file their 1099s. We track the sales tax. We review every single invoice, everything they do every month for sales tax compliance to make sure they stay compliant. We report and we pay that for them. And for a long time, I've really only done taxes for our monthly clients, but I think I'm going to open that up and actually have so many seats for non-monthly clients to help you guys with your taxes. If that's something that you might be interested in, having us do your taxes this year, where we can help you with all of these nuanced things, please let me know in this comments. Yes, I would be interested, because I'm going to get a wait list going for that, I think. So you guys can start saving a spot and get you all ready and organized before we're there. All right. I hope that's helpful. I get passionate about these things, so I can go off, which I just did. So let's see. Karen says, okay, so it's just however you want to see things recorded. Yes. You really want your P&L to be like, how do I want to see the data? Garbage in, garbage out, friends. Because no matter how you put an expense in expense or income is income, if you put them all in one account, you only have income and expenses as two accounts, you're still going to have the same net income or net loss. to report. This is allowing you a way to structure how you want to understand your business, especially month over month or comparable year to year. This is, bookkeeping is so important because you get the P&L and you get a balance sheet. Your balance sheet is going to be accruing your sales tax balance. So you always know, okay, maybe you only file quarterly, but you can see how much money is accruing in there and that you'll need to have that set aside for it to get paid in a month. Proper bookkeeping is important, and a lot of people skip that because they're not sure of it. And yes, QuickBooks is not the most perfect thing. Some days I want to throw it out the window, but it is the most robust and it is the most, I don't even know, like accurate way of doing actual bookkeeping. It lets you reconcile to your bank statements. That's also important. You can keep it all in a spreadsheet. You can try, and we work with clients that use HoneyBook and Tave and Sprout Studio and Studio Ninja and every CRM you can imagine, Dubsado, all of them. Yes, they all do a pretty good job with income, and a lot of them have like this half-assed bookkeeping or where you can log your expenses or like 17 hats, you can connect your bank. None of that has a balance sheet. None of those have a balance sheet. Dubsado, love them, but they put sales tax in your income. If you go look at your report, sales tax is shown in the income, so you have to remind yourself to take it out. I just realized about this. Maybe I should write a blog post on that. Because if you didn't know this and you were like, okay, well, I'm just going to take this Dubsado report and send it to my CPA, they may not know. They're not going to ask questions. And now you've just reported sales tax as income. So now you paid income on it twice. Like you don't want to do, you've been taxed on something twice. I am going to make a note. Dubsado. We actually have been thinking about doing sort of like a CRM breakdown of all of them. Like what are the pros and cons when you're not at the back end? So if you knew, okay, I've done research for all of them and I love how HoneyBook does this thing, but then we'll have a blog or something that's like, okay, here's the pros and cons. So HoneyBook only lets you, like, they don't do the sales tax calculating it all for you. You have to calculate it and create a rate. Like, I can give you all the pros and cons all day to all of them when it comes to the business back end finance side of things. And I think that would be part of this that we're talking about, sort of a CRM series, if you will. Okay, that's coming. That's interesting to you. CRM series. Yes, please say it in the comments. She says, what? Okay, sorry. That's helpful. I'd be interested in seeing more info on tax services you'd offer. You got it. That's going to be coming. What do you think of Wave Accounting? So it's okay, but again, to a point, you get what you pay for. So it's all right. We actually have a client that uses that. She prefers it, but then we actually bring all the data into QuickBooks because that's where the rest of all her stuff is. But she prefers it for billing for some reason. It's okay. I'm trying to think of the pros and cons really quick. Some of the reporting is whack. That's usually my complaint about a lot of these. It's like when you pull a report, the report is called something, but that's not really what you're getting. Because if you look at, and I believe it's if you invoice out of there versus the other things in there, they're like on two different reports, so you're not pulling in the full income. It's not my favorite. If you're gonna go for bookkeeping software, I would say QuickBooks all the way. You guys get my discount. I have a video on my YouTube channel about how to get my discount on that, and I think you get that discount forever. It's like a certain % off or whatever. For our monthly clients, we set everything up for them, and we pay for QuickBooks as a wholesale, so that's part of their monthly fee also, if you're looking for someone to handle it for you. But I would say go with QuickBooks, and not QuickBooks Self-Employed, because that is not for a business. That is for side hustles, like Uber drivers, people who are not growing something, they're just making income on the side and need to track things. It is not for actual business, and I have another blog on that I'm going to link in here. But I would say it's one thing trying to use your CRM, but if you're going to go out of your way to use like an accounting software like Wave, I would definitely go with QuickBooks Online. Check out my course, QuickBooks Online for Photographers. I walk you through how to set it up, how to import chart accounts, how to do everything. That's inside the vault that is coming very, 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 very soon. I'm just wrapping up all my content into one-time fee for you guys because I want this stuff in your hands. I want you to see this stuff. It's so hard because all these questions you guys ask are sort of in depth and involved. Like, I can give you a quick answer, but then here is like the deeper level of why all this stuff. Because if you don't understand why, it makes it easier. I believe in teach a person to fish. Let me just grab that blog really quick. We were just talking about, oh my God, I just lost it. We were talking about self-employed, QuickBooks Self-Employed, and QuickBooks Online. The difference. I have an entire blog on that. All right, next question I see is Pixie said, does break down the income with and without sales tax without credit card processing fees, which is super helpful. Yes, but you have to set it up. You have to go make sure you understand your state sales tax laws, and then you need to go to Pixie Set and you need to set it up, and you need to make sure you're charging it to the right people on the right things. That's the unfortunate thing about many of these. Some of them link to Avalara or TaxStar to get the rates based on maybe an address. But the other thing I love about QuickBooks, so we import all of our client stuff from any CRM they are into QuickBooks, because QuickBooks actually has a database that it knows you're in California. So that means sales tax is based on your client's address. And then the client's address is this. So here's the tax rate. And it pulls it from the database. It's just, sales tax is just so exhausting. Colorado is the worst state too. It's very intricate. Every local has something. We have several clients in Colorado, and it's like an all-involved thing. But sales taxes really get you, because the states are the first to come after you because they want their money, because like 90% of the money that states make is from their sales tax. So let me try to find that. Self-employed. QB self-employed. Search my own blog so I can grab that. If you helped with business personal taxes, does that count as a business expense? Yes, absolutely. That whole thing can be a business expense. It's all involved. We write that off for our clients, the whole thing. It's part of their package. So when clients work with us, they're paying one monthly fee, and if they're in the legit package, they don't have to pay us at tax time. We tax plan for them each quarter. We help them calculate their estimated payments so they know what to make. But also before then, we help them strategize. Well, you might, if today were tax day, you know this much. What can we do? Okay, let's get a self-employed IRA set up. Let's get a S-Corp election. We help them with all that. That's we work with them. We're not just like here at tax time, or we're here to do the bookkeeping each month, right? So we do all that, and we keep all that information, and we monitor it. And then we get to tax time, and it's really just a formality. It's like maybe they're waiting for their spouse's W-2, and that's it, and we file. Tax season at Bastion Accounting is like just checking the boxes, because we do all the work each year, during the month, during the quarter, right? How many of you, tell me in the comments, please, if you're watching the replay, whatever, how many of you are not there yet? You're like, oh shit. And then you're like, in January, maybe February, once the holidays settle down, you're like, okay, now I need to go through all these accounts and figure out what's business, and I got to put a spreadsheet together and do all this. Like, tell me if that's you. Because if that is, doesn't that suck? Because now you have no idea how your business is even doing until next year. Like, bookkeeping and working with a tax pro helps you understand, what am I doing now? What could I be doing each month? You have strategy. Once you get past 12/31, you have like one strategy left, and there is something that you can do. There's certain IRA plans you can start, like let's say in February, and you can take money from 2024, put it into this plan, and claim it as 2023, the previous tax year. There's certain plans you can do this with, and you can actually take it all the way up until you file your return. But that's the really only strategy you have after 12/31. So it's really, really important that you understand the benefits of bookkeeping, my friends. I'm digressing as usual. Sorry. I'm going to pull up I think it's QBO. Let's see. Good. Lots of good stuff. So Ashley, I just want to make sure you are right. That looks beautiful, but you do have the maintenance of keeping it up, and then you're responsible to pull the reports, and you're responsible to remit and pay that sales tax. Although I feel like there's a little part of my brain that's like, they may have started offering with their studio manager, like maybe there's an option where they handle sales tax now. I don't know. And usually it costs more, but let me know. I'm curious. I don't remember. We have a lot of CRMs we work with. I pay $30 a month for QuickBooks Online. They raise their price constantly. It's so expensive for me as a small business. I totally understand, because I pay a bill for all of my clients, but I get wholesale billing. If you get my discount, you get a certain percentage off forever. But the thing is, I hate to say it, and please, unpopular opinion, but bank and merchant fees and your software that you need, especially bookkeeping and a good CRM, like that's the cost of doing business. And that's something you consider when you do your cost of doing business for your pricing, right? What are my expenses? And we have a whole blog on the cost of, trying to figure out the cost of doing business, because you need to figure out what is the bare minimum I need to do my business, and then what does that cost me, and then what is the profit margin I want to make, and now I know how much I want to make for the year. How many of these do I have to book? When you start to strategize your business out like that and look at it in chunks like that, it becomes so much more mentally manageable, and it's so much easier to create little milestones, meet goals, and actually grow. Does that make sense? And I'm like trying to do these here at once. Let me grab that. Here's the cost of doing business. We'll link that buddy in here. Talk about that. That's super good. And then let me grab the QBO guy. Just, there we go. I'm not really sure what just happened there. Hold on. I want to grab you that QBO. And then if you, okay, I have QuickBooks currently, but honestly, I haven't looked at it in a long time, so it's a mess, I'm sure. Girl, we find that every single day. So I always tell people, we're like the Marie Kondo of bookkeeping. People will come to us and be like, okay, I'm finally ready to have somebody just help me with this. And we never take a dirty file. It is so much harder to clean up. We start from scratch. We bring in all of your history. We can decide to go back as far as you want. If you haven't filed last year's taxes, we can go back and get all of 2022 and the 2023. But most people at this point have filed, so we would bring in all of 2023. We get it organized. We get all the data in there. We reconcile it to the bank statements using the reconcile feature in QuickBooks. Most other Wave, all that stuff, you can't reconcile the accounts. In any of your CRMs, you can't reconcile the accounts. And that means if you get audited, you have unreconciled information. And we get all that put in and we make sure it's compliant. And then we go through our clients' income transactions every single month to make sure each one of them is tax compliant. And we help them adjust where they need to. And then we file and pay sales tax. We send them a report to approve each quarter or month when it's due. We help clients register for sales tax. We do LLC formations. We do S corporation election. We do all of that. It just helps us. We handle it all, so we know what's going on. We're not waiting on you for information. And what's the worst part than if you're already busy to be the middleman between some CPA and some bookkeeper or something? You know what I mean? Okay. I actually have a good blog here. So this one is about your CRM versus QBO, because a lot of people think, oh, I have financial statements in 17 hats. You don't. And then, I do have a quick QuickBooks Online blog here where all the benefits. Did it work? Sorry, I'm trying to load this up with some. I'm going to go right back up to the questions in just a second, and then let's see. I had the self-employed one. Back to the self-employed QuickBooks Online, that you want to make sure you have the right version. QuickBooks Self-Employed literally is not meant. It doesn't have a reconciliation. It is not meant for a business to grow. It's just meant for you to track side income. Like if you're an Uber driver, is a great example of, and that's why they came out with QuickBooks Self-Employed, to meet you where you to get that market. So there's that. Okay, I'm going back. Oh my god. Okay, Karen, thankfully in New Hampshire we have no sales tax. Yes, you are correct, friend. Thank goodness, right? Michaela says, just left Colorado, came back to Washington. I think taxes general are so confusing. They are. And I was born and raised in Washington State, so Pacific Northwest. I'm in Buffalo, New York now. I've been here for about almost 14 years. And Colorado sucks because they have so much sales tax in every local jurisdiction you have to report to. It's like, mind-boggling. But Washington has sales tax on everything for photographers, and you pay B&O tax. So there's no income tax in Washington State, and so taxpayers are not paying income tax to the state. Instead, they tax all businesses a B&O tax on their revenue every month or quarter. So fun fact in case you wanted to know. Karen says, awesome. Karen says, at what point in someone's business income-wise do you suggest hiring a bookkeeper or accounting service? This is a great question, and I get asked that all the time. Part of me says, I can't tell you how to prioritize your expenses, right? But I want you to think about the return on investment of having somebody handle your bookkeeping and helping you get and stay sales tax compliant and helping you get and stay compliant with W-9 and 1099 tracking and file your taxes properly. If you're audited, they can help you review that return. So when I do a tax return, if they're ever audited or they ever have a question or get a letter, our clients send that stuff in and we help them work through it. Having someone on your team that you can ask a question to. So for our clients, we have a mobile and a web-based app where that's where we do communicate. That's where their tasks are. That's where their contract is. That's where their payment is. Like all this stuff is in one spot. So they can just sit down and be like, hey, I have 30 minutes between shoots here. Let me see what they need from me. And all your tasks are in there. But you can also send us a message. Hey, and this is my favorite because we're getting to that season where our clients will be like, sending a message like, hey, on TikTok, I saw this tax thing, right? And they'll link it to me. And so I'm, debunking tax myths all day during the season because people on TikTok want your clicks and they want your saves and they want all that. So they tell you just enough about the tax law, but don't tell you that most people don't qualify for it. You know what I'm saying? Just watch out for that. But we're there to help you with all of that. And you have us in your back pocket. So what is that worth to you? And you know what I mean? It's just like anything. And you have to figure out how to invest in your business and where is it that you need to do that. And I think that, I can't say this because we have clients who are just starting out or maybe still have a full-time job and they're using that job to support this new venture and they've hired us to help them get everything set up and to keep on top of it. Where we also have 7-figure photographers who don't want to know they don't want to see it, they don't want to deal with it, they just want to have somebody take care of it. So it depends on what that value is to you to have that stuff done. And a lot of people come into it where they, a lot of entrepreneurs, not even just photographers, myself included, you start a business, everything's going fantastic, and then all of a sudden you're like, oh shit, I owe how much in taxes? And it all gets away from you because business and entrepreneurship is literally like 17 hats, right? You're like doing all the things. So again, it's like, when does it make sense? So I want you to think of like a quadrant, and this is from, to give credit where credit's due is, oh my gosh, I can't think of his name, but it's Michael Hyatt. So he has that quadrant, right? It's like the things you like doing, the things you hate doing, the things you're good at, and the things you're not good at. You should spend most of your time right here, what you like doing and what you're good at. And you should hire out the other things. Because when you do that, you're going to be able to scale quickly, right? The problem is we try to do it all. And we spend all of our time and energy into spots that we're trying to go learn. I've done this myself, trying to learn WordPress. I mean, I used to write HTML back in the day. I used to design websites. Then I finally realized, well, I can just give my vision in a Canva to someone who can actually make WordPress do that. But now I'm in Squarespace and I love it and I can actually do it myself. But do you know what I'm saying? Like, you have to figure that piece out. I can't tell you that. Obviously biased, I'm going to say you want to have somebody on your side with taxes and all this stuff with a business sooner than later. But again, I hope that answer is sufficient for you. Can I file 2553 and now report 2023 taxes as an S Corp? So Ayumi, you have to be an LLC first. You can only create the S Corp back to the first day of the LLC. So for this year, you need to have been an S Corp or an LLC at least since January 1st. Otherwise, it'll start where your LLC starts and you might have to split the year in half. Also, you need to be on payroll. You need to have a payroll company do that. Or I know we've chatted, so we handle payroll for our clients. So we do all the back end stuff. We get them registered for all the payroll taxes that are federal and state. We run payroll. We withhold the payroll. We get the taxes paid. We handle all that stuff. You have to be on payroll in your company. And if you were going to try to elect it right now, you only have about a little over a month and a half left in this year. So you have to have paid yourself a payroll. So you need to have a chunk of cash sitting there so that you can elect S Corp and then pay yourself a payroll, a big chunk. We help our clients figure this out for 2023 because when you file your 1120S return, there is a box on there that says, it looks for the shareholder's salary, and if it's not there and you didn't pay it, there's a great red flag for an audit because when you become an S corporation, you no longer pay self-employment tax because the trade-off is you have to be on payroll where you are still paying into federal Medicare and Social Security. And again, if you haven't watched, I really, really encourage you to go watch my free training on the S Corp, which is S Corp benefits for photographers. It's free on my website. Go to Learn With Us. check that out. I go through all this stuff. And then inside the vault, we actually have Business Structure 101, where we talk about every business structure. We talk about how you compare them, when you can change, when you should switch to the others. So I hope that's helpful. And I think we have a call next week, Ayumi, so I hope that we can chat about that. No, I have to, and just be with an S corp. I'm going to be honest. I'm going to go back to Karen's question. When you become an S corp, if anything, and you don't have an accountant, that is when you need to. Now, a lot of other accountants don't handle this, but we do the accountable plan for our S corporations. We handle payroll for them. We handle all their sales tax. We actually give them a couple sales tax states in our packages. We do the accountable plan, which allows them to reimburse themselves tax-free for out-of-pocket stuff, for mileage, and for home office deduction, which we also talk about in that S Corp training. We handle all of that. Most other people don't. Most CPAs and other people don't do any of that stuff. They'll tell you, and we've had a lot of clients who somebody makes them an S Corp and never tells them they have to take payroll. It's just crazy to me. Okay. Ashley, no, I have to manually add the tax percentage into Pixie Set, which my accountant said that is concerning and very scary. Yeah, it is. It's annoying. That means you need to make sure you're tax compliant. And if you're in a destination state, so I want you to know, majority of states are destination state, which means the sales tax rate is calculated on the client's address where they take ownership. Unless you're in Maryland, which is also a destination state, but if you have a studio in Maryland, you can use the brick and mortar rule, which says that you can use your studio address as the destination. If you're in an origin state like Texas, which I would say 1/3 of the states are origin, and we go through all this in the state-by-state sales tax guide, free on my website, bastionaccounting.com. Go to the sales tax guide on the Learn With Us and grab that. But if you're in a destination state, you're going to have multiple different rates because your clients, you're going to be either shipping them stuff or, they have different, and that's where they're taking ownership, is that address, not your address. So that's where it starts to get hard. And something I want to talk about when I do, maybe we need to do a gallery. Maybe we need to do CRM pros and cons and gallery pros and cons. I'm just making a note here. Because something to consider is some galleries are just not good if you're in destination state, like Shoeproof. I think Shoeproof is the one. It's like a nightmare because they only allow like one tax rate. And so it's like, how are you supposed to do that? And I've talked to support on many of these things. I'm like, come on now, I'm an accountant. How can you create software and then support this feature but not really understand how it works or not have it set up so people can use it properly? That's my biggest complaint. So a gallery and a CRM series will be coming on the pros and cons. No, I have to manually, okay, got that one. How much are you monthly? My business isn't really going yet, but I feel like I'm going to need help now that I'm doing products instead of digitals. So Michaela, I would encourage you to fill out our application, set up a call. We can talk through all of that. We have our packages, but we also have something called a growth plan that's sort of, you have to, once we talk, I can see if that is something that you're qualified for, which is a lesser rate for 6 months to get you sort of caught up and grown. But we can talk about that. I would love to chat with you. Getting this off your plate and letting us do the heavy lifting and having a team on your back end doing all this stuff, priceless. This sounds so dreamy. I mean, if on a Saturday I can get you here talking about taxes and you say it's dreamy, I think it can go now. I think I just met my life's goals. Awesome. All right. Oh, Darcy, as soon as you get audited, you will never do your taxes again. That's absolutely true. Oh my God, what a nightmare. And the other thing to think about with that is like keeping your business and personal separate. Even if you're just a sole proprietor, for the simple fact is if you can have it all flowing through one place, like that's my bare minimum. I say, if anything, go get a separate bank account and put your business stuff in there. I don't care if you take $10,000 or $1,000 from your personal return, your personal income, and put it in there. That's called an owner contribution. Did a blog post about it on my website. And that way, all your income and expenses flow through one account. If you get audited, they're only looking through that, right? At the end of the year, let's say you don't, you're old school. You're still spending February getting all your records together. At least you can import that into a spreadsheet and get it cleaned up. If you get audited, they only see that. When you mix everything, they see everything, and one thing leads to another, Pandora's box. We never want to show them more than they already asked for. And the other part is like, look, I mean, I'm sure somebody here knows what I'm talking about when you spend a month getting everything from every account everywhere and you still feel like you're missing something. That's the point of having it all go through a business bank account, is so that you can reconcile it to a bank statement. You check and tie every single thing off. This is what I tell the clients, we were talking about this earlier, like they were the Marie Kondo of bookkeeping, I say, because she doesn't come in and just pick through your stuff, right? She comes in and she's like, take it all out. Okay, and now we're going to go through, and we're only going to bring back what's needed, and we're going to bring it back in a functional, organized manner. And that's kind of what we do with the bookkeeping. And we create a whole new QuickBooks file to get all of that nice and organized. So if you're audited, we have all of the backup in the right place that matches your tax return. How many of you have a profit and loss statement that matched the tax return that you filed last year? And if you got audited, it matches, can you go pull all those transactions? Do you have all that information? Now, we don't require receipts from our clients, but you guys need to keep receipts for all this stuff. I do it paper form in a folder. I have an old school folder for all my receipts for last year when I do my taxes. But things to chew on, right? All right. Cool. Awesome. I mean, we're almost at an hour, but I'm okay. If you have any questions, let me know. I'm going to go looking through the other questions we had really quick. And let's see. Victoria. Different Victoria, I believe. Is it different Victoria? Oh, yeah. You're Michaela Victoriano, right? Okay. Sorry. That mixed me up. So Victoria, I'm going to tag her. She had a question. I have Victoria. There we go. She asked me, do I have to pay a salary to myself if I have an S Corp, or is it optional? It is absolutely not optional. It is literally, again, it's illegal to not do it, because now you're taking advantage of the tax benefits without following the requirements, and that is just never good. I've definitely had clients come to me who someone made them an S Corp, or they did it themselves and they didn't really understand all the things they had to manage and do, and that's not good. So you have to pay yourself a payroll, and it isn't a draw. It isn't just transfer money to yourself. You need to actually have payroll set up through a payroll company, or like I said, we handle payroll for our clients. And the payroll is going to be like, here's your salary. And out of your salary, there's withholding for federal income tax, state income tax, there's Medicare, Social Security, there's state unemployment, federal unemployment. All that stuff needs to be calculated with your salary. It needs to be withheld. It needs to be reported to the various different, I don't even know the word I'm looking for, like agencies involved in that. Some of them are quarterly, some are monthly, some are annual. All that needs to get done on the back end. That is what payroll needs to be done. So it isn't just transferring yourself money. When you take money out of your business now as a non-S corporation, that money doesn't matter. It's not taxed, or it's taxed, but it's like, no, whatever. If you have a $50,000 profit on your business and you only took $20,000 out for the year, it doesn't matter. You pay taxes on $50,000. You pay self-employment tax, federal income tax, state income tax, okay? And self-employment tax. I think I just said that. I talk about that. I compare that in the S Corp training. If you want to check that out on the website, it's free. Kelsey, you're here. You said, I have a separate business debit account, but I have not had any earnings so far this year. I've had expenses from my personal account, though for free shoots, studio rental, location fees, clothing, accessories for subject. I've connected all of my accounts to QuickBooks so I could still get the habit of categorizing things. However, I know it's not ideal to put expenses against personal accounts. Mixing personal and business is their best way to manage these expenses in QuickBooks until I earn some money. So yes, first of all, we never do that. We never connect a mixed bank account to QuickBooks. That's a bad idea, because even if you decide later on, okay, this is, now I have a new business account, now that whole balance in that account has to go to owner draw. It looks bad. So I would say, don't do that, undo it. And I would say, what I do for this situation is we connect business only bank accounts. So I would definitely tell you to go get a business only bank account. And even if you have to put some money in there, I feel like my dog is about to lose her shit. Do you want to see? Let's look at Siri. This is Siri Saturday morning. I'm talking fast in case she starts to go ballistic. Anyway, so we want to take all that stuff out. And then what we do is we import. We have importing tools because we do so many QuickBooks files, but we import all your out-of-pocket. as an owner contribution. So each transaction is going to be owner contribution, meaning personal money put it into your account. So your owner contribution is going to go up, which makes the equity of your business go up. And then every single one of those expenses gets expensed on your books, which, because you said you don't have any income, may become a loss, and that's fine. And you do need to report your taxes even if you have a loss, because that loss is going to go to your personal return. Remember, it flows through, and it's going to lower your taxes there. So let's say you have a W-2 job, or your spouse has a W-2 job, and you have a loss, you're actually going to get money back. Now, you can't have a loss too many years in a row, and they might start to question you, and they may send you a letter and state you're a hobby. We talk all about the hobby rule inside of the vault, and there's a whole hobby rule 101 in there. But essentially, they will say, hey, you know what? You haven't made a profit in a while. We think this might be a hobby, and then you have to prove to them, well, you're trying to make a profit. Now, granted, the last couple of years have been crazy because of COVID and the world, and so things are a little off kilter, and it may be the case. But just so you know, most businesses do lose money in the first few years because there's a lot of costs in getting something started up and getting everything going, and the advertising, the marketing, the website, equipment, and stuff. So, anyways, I hope that makes sense. I would not have your personal stuff in there. I would put the personal in there as an owner contribution. There's also a blog post that talks about it on my blog, and we talk about it inside the QuickBooks course as well. But then I would not have them linked because it's just really messy. And then again, I would go get a new bank account. Even again, if you just take $100 from your business banking account and put it in there, that $100 is an owner contribution into that bank account, and now everything can come out of that bank account. And then you can transfer money to that bank account from personal, which is an owner contribution, and then keeps paying the expenses. And then if you get audited, it's all there too. I hope that's helpful. Let's keep going. Victoria, okay, got that. Do you need to pay yourself via payroll only if you're an S corp or so? No. So you payroll is only for S corporations. It is a requirement. You have to be on payroll through a payroll company or payroll service or processing payroll with all the state and federal taxes and unemployment stuff involved. Okay. That's why at this point, when you become an S corp, you really should have an accountant working all this for you, just to make your life easier. When you are anything else, you just take owner draws. Just transfer money from your business to your personal, because again, if you go watch that S corp training, it shows you how a non-S corp works. So a non-S corp works like this. Let's say you had $100,000 of revenue and you had $50,000 of expenses. 100 minus 50 is $50,000 profit. And some people will say to me, how come I have a $50,000 profit, but I have no money in the bank? Well, when you take money out or use money for personal things, like using your business debit card for Starbucks, that was personal. That is an owner draw. When you transfer yourself money, that is an owner draw. Okay. And I should add that if you're an S corp, you can still take draws. They're called distributions, and there's a whole strategy on that as well. You get tax-free distributions, but that's in the video. Anyway, so whether you took $10 or you took all $50,000, it doesn't matter. The $50,000 you are taxed on. That profit goes over to your personal tax return on your Schedule 1, that then you pay 15.3% self-employment tax, which you don't pay if you're an S corp, which is also in the video. Then you pay federal income tax and you pay state income tax. So then that $50,000 on your income statement on 12/31, on 1/1/2024, that moves over on the books. This is why you should use proper bookkeeping, because QuickBooks does this and understands that balance in your income or your loss goes to owner equity. So the money the business made or lost goes to your personal equity in the business. So on your balance sheet, which again, QuickBooks is the only one that has a balance sheet. Most other accounting things and any CRM does not. The balance sheet is your equity. So essentially, when you take the draws out, you're actually taking money out of your equity. So you're taking, because owner contribution increases your equity. You're putting money in the business because you're paying out of pocket personal money for business expenses, etc. And your owner draw is you're taking money out of the business for personal things. So we need to draw it out. Those two together are your owner equity. And I go through a whole balance sheet and income statement. I talk all about that inside the Education Vault. But my point is that, so you're actually taking out money this year, like as a draw, when you're not an S corporation. You take money out as a draw. That's money you paid taxes on last year. So it's not really tax-free. Does that make sense? You probably paid too much tax on it last year, and now you just take it out if you're not structured properly. Let's see. Hope that helps. So Karen, the answer is you should not be on payroll until you are become an S corporation. You cannot be an S corporation unless you're an LLC first. And I would say at that point, you definitely want to have a professional help you. And if you need help, girl, we got you, bastionaccounting.com. Shameless plug, but that's what we do all day long, and we do it specifically for photographers, and we've been doing that for about 4 years. I've been in business for 10, but we've niched down to photographers specifically for about the last 4 years. Is there a benefit to being an S Corp versus anything else? Absolutely. Go watch that video. That little video, this training is 20 minutes long. I'm going to grab the link. It literally walks you through all the benefits of being an S corporation. I'm just going to grab you a direct link from the website to drop here. And it tells you when it makes sense financially to elect S Corp. So there's that. So check that out. All right, going back to this. You guys still with me? Kevin Looney says, I regularly do some work for a local. Let me just tag him. I was going to make sure the profile picture matches and hope that someone didn't change it since... Oh, I think it updates anyway, right? Yeah, that's him. Okay, cool. So Kevin says, I regularly do some work for a local small business who pays by check and issues me a 1099 every year. If they were to start paying invoices by credit card through Square, who also issues 1099, how would I handle that in return time if I'm issued two? So they're not allowed to issue two. There's rules with 1099s, and we have entire lessons on Contractor 101. It goes through W-9 form, how to fill it out, how to make sure it's filled out correctly. We talk about 1099s. We talk about 1099K. So for this year, there's a new rule. So normally it was like, you have to think first of all, this is only for business accounts. So if you pay through PayPal, family and friends, that is actually a violation of the terms of service. Same thing for Venmo. I've actually had a client lose $4,500 deposit because she got caught using Venmo for business there was no Venmo business at the time. It was new. But if you're not paying fees and penalties for processing payments, unless it's a direct ACH thing like through Zelle, then that's fine. Then you're actually in violation of the terms of service of using that. There is a cost of doing business, which is paying fees and penalties on payments being processed. It's just what it is, right? So now the IRS has these credit card companies. They used to report in a 1099K the money you received over $20,000 because they want to make sure you're reporting it. Because remember, if you're not an S corporation, you have a separate return. I mean, you don't have a separate return. So this is really, you're up to you do fill out the Schedule C, and it's really the honor system that you're going to fill it out correctly. And so they want to make sure. So how this happens is when you fill out Schedule C and you have your tax ID or your social security number on the Schedule C, they're going to cross-reference that with every 1099 issued. So they should not be issuing it. If they issue you a second one, you need to push back to them because they've just reported that twice to the IRS. But my point is this. So it used to be credit card companies, PayPal, any third-party payment processor had to report a 1099K to you for money you received through a business account if it was $20,000 or more. Regular 1099s are you report $600 or more. Well, as of 2023, it was supposed to be 2022, but then in December they decided to push it off, and it's this whole Congress fighting this thing. It's $600 or more for either now. So now it's different because where you may have filed an error or not filed when you should have, it wouldn't have mattered because the 600. So that left a gap. If you made over 600 but under $20,000, you could sort of scam the system, right, and not record it. I mean, yeah, because I'm sorry, not over. I'm thinking the other way around. If you made under 600, yeah, but if you made over, if you were paying through a third party, then you made under $20,000, you could just not report it because they wouldn't know. Anyway, my point of this is to say, if you get issued for the same thing twice, you need to push back. You need to also make sure it's on business accounts. This is going to get really tricky at tax time. Really tricky. We have a whole thing on 1099K. I think we even have on the blog talking about the new form. And then in 2020, they created new forms. So there was 1099 miscellaneous form, used to be everything. But now there's a 1099 NEC, non-employee compensation. That's specifically for people that are self-employed. They took one box off the old form and put it on its whole new form because they're trying to track. There's so much self-employment and entrepreneurship happening in the United States that they want to make sure they're getting their money, So they're trying to create methods to figure out what you're not reporting, essentially. I hope that's helpful. The training link is not working for me. I've tried this week a couple times. It's loading but gets stuck. I'll email you later. I'm just going to check. It should be... I'm just loading it now. It's working for me. You mean the link that goes to the video directly? I think you just have to let it load because I see it's loading the video and then it will play. Yeah, I would definitely encourage you to check that out. Ayumi. I hope I'm saying Ayumi right. Okay, Kevin, I hope that answers your question. Thanks you for answering all this. Is so helpful. You are very welcome. Look at, we are in the season of all that's about to go crazy, and I want to help you guys the best that I can. Stephanie says, we live in Oregon. Let me go ahead and... Stephanie Murphy. I always just want to make sure I have the right person. Am I spelling this right? There we go. Found her. Okay, cool. Okay. Stephanie says, we live in Oregon, but are looking to start doing weddings in other states. Oregon doesn't have sales tax, so we've never had to worry about this. How do we go about doing this in other states? Also, someone said that sometimes the city will also have a sales tax on top of the sales tax, state tax. Do we build that tax into our set cost, or do we do the cost and then add the tax on? Sorry, I can't read. And what if they are paying overtime? Really, I just need the information. Okay, so let's talk about this real quick. Break it down. First of all, if you physically go to another state, that changes everything. There's something called Sales Tax Nexus. I teach this in Sales Tax 101, which is also inside the vault. That is a course that goes through everything you need to know about sales tax. I also have the free sales tax guide. I walk you through kind of how to use that. The sales tax guide is free on the website, and it breaks down each state. When you are in your state that you work in, if your customer is also located in that state, sales tax laws apply to whatever your state says. And that will be destination or origin, which means the rate is based on where they take ownership. In some cases, I tell clients in destination states, have them pick up from your studio, because now you can use your studio as the address they pick up, but it has to be where they take ownership. But it's also what's taxable, not taxable in each state. The biggest thing you need to understand is if you physically go to another state, you have entered into that state physically, and now you have something called Sales Tax Nexus. And that's how our guide works out. So once you are like, okay, I'm physically going there, then you go to the next question in our sales tax guide. Our sales tax guide is written like a choose your own adventure. Did you do this? Yes. And then we'll tell you, okay, go to the next thing. Did you do this? Yes. And then tells you what's taxable in that. So then once you're in that state, we need to figure out if what you're doing is taxable. If what you're doing is taxable, then we need to figure out what rate do you need to be charging. Is it the client's rate? Like that. Now we have some clients who, like school photographers, for example, they will go to the school in another state, but schools are sales tax exempt, and they can provide you with a certificate so that you don't have to charge sales tax. But then the parents order online. So technically those are new orders online from another state. When you're doing out of state things, it's not taxable. So you can see how confusing it gets. But above all, sales tax, you need to understand the rules. Sales tax gets added on to the things that are taxable. On your invoices, you are required to be it needs to be very clear what's taxable and not taxable on an invoice. You need to have a subtotal, and you need to have a tax total, and you need to have the rate. You have to have that. That is legal information, has to be on there. You can't, some people will have wedding packages, and they know they want to have this beautiful package. It's $10,000, includes sales tax. That's fine to have on your website, but when you bill them, it has to be broken out to show what was sales tax, what's the rate, what's taxable, what's not. It has to. It's the law of receipts. When you go to a store, look at the receipt from now on. You'll see what items are taxable, not taxable, what rate. That has to be there. That has to be transparent to the client. I would encourage you to take my Sales Tax 101 inside the course vault. The education vault, I say, is coming out very soon, and it's every content, every course I've ever made, all of that is all in there for you. And I would get on the wait list because that stuff is valuable, and it's a really good way to build the foundations of all this stuff. You can include it in your cost, knowing, okay, well, we're going to have to do sales tax on this, but the sales tax is on top of it. So if you have a $10,000 wedding and you're in a state where everything's taxable, like Texas, it's $10,000 plus sales tax, and Texas is an origin state, so that means it would be the rate is based on where your business is in Texas, so your rate times the $10,000 is the sales tax on that. Does that make sense? I hope that's helpful. Okay, now we have this question here. I'm gonna go ahead and say she didn't Let me just tag her. Vicky says, there she is. So Vicky says, wondering if most of your clients are using M&IE for expenses other than lodging, of course. Also, how familiar you are with the 12-hour rule. Okay, first of all, that is for like truck drivers. That is not specific to your industry. So that's very connected to transportation workers. A lot of them, because they deal with unions, this is a way of making sure of that. So this has nothing to do with photography, and I feel like I might be missing why you're asking that. So if I am, please comment below. But what I will expand on is when you are a photographer and you travel, those are business expenses. However, you need to be mindful. I am working on a travel template for you guys, because sometimes you travel and it's part business and part personal, and there's rules that apply for this type of thing that says what you can and can't count in that trip. That's business. So you can do a mixed trip, but this worksheet will help you sort of organize what's deductible and what's not. But let's say in this instance, 100% deductible. You're going to Vegas and you're going to the photo expo or something. Your flight, if you're going there just for that and that's what you're doing, your flight, your hotel, any mileage, if you drove there from somewhere instead, if you get a rental car, gas for the rental car, all that stuff is deductible to your business. And I do have travel expenses. I believe a blog post about travel expenses on there. And then I also have an entire blog about traveling into other states and understanding that you have to do sales tax and stuff like that. But yes, so I hope that answers that question, Vicky. I'm not really sure, but what you're talking about doesn't apply to the photography industry. So I just want to make clear with that. Caitlin. Let me type this. Caitlin Blades. There she is. Cool. There she is. As you guys edit your photos and listen to all of this, I hope this has been, entertaining and helpful. Let me see. She says, answering. So Caitlin says, hi there, I'm an LLC photographer out of Nevada. Can I start renting out my client closet under my LLC? What steps would I need for that? So you totally can, and it's totally fine. But I would create a separate income account on my bookkeeping, and I would keep track of, for my own knowledge, like how much money am I making from rental, and then what are my costs? Because dry cleaning costs, so I have an entire blog post on clothing on my website, what can be deducted and what can't be, and part of that is your client closet. So there is dry cleaning costs can be deducted. So if you have to have things done to the garments when they're returned, or to make sure they're ready for the next person, that can all be an expense for that, and I would have that in its own category so you could see the rental income and cost versus the photography. But another way you could do this in QuickBooks is classes. So you could see your P&L and literally see 2 columns of income and expenses. Again, another reason why it's great to have somebody help you get this all set up and organized. But you most definitely can do that. If you wanted to brand it as something else, I would get a DBA under your LLC just so you could have another logo and name and sort of be its own thing if you're going to make it go full steam. Just things to think about. The DBA and the LLC under the LLC will have the same tax ID. It'll go on your same return. It just allows you to have branding and a kind of a different brand name for that makes sense, but it still goes together. And I talk about that inside of the Education Vault in Business Entity 101. We talk about the DBAs, LLCs, and how all that can be structured. It's very common for boudoir photographers. It looks like we are down to the last question here. Which we already, this is Darcy's question. So Darcy, you're here still, right? Let me know you're still here. Otherwise I'll tag you and we'll answer your question. And then anybody else has anything else? Otherwise I'm going to skedaddle out of here, and I will be on next week, probably Friday. I hope this was valuable. I'm waiting for Darcy, so I'm going to give her a minute to type. Once I know Darcy is here, otherwise I will tag her because she may have wandered off. Oh, there she is. Okay. I wanted to tag you in case. All right. Darcy asks, I live in Oregon. If I donate my time of shooting to a nonprofit organization and they send me a receipt for in-kind services, my tax lady tells me this is not tax deductible. Why and how can I make it a tax deduction? Well, my most unpopular blog post of all time is there is no such thing as a business donation unless you are a C corporation like Target or Starbucks or one of these big companies. They're double taxed, so they get that. They pay taxes on their income, and then the shareholders pay taxes. If you are an S Corp, an LLC, a DBA, sole proprietor, anything else, it all flows through to your personal tax return. And so we help our clients structure these. Like a lot of them will message us in the portal and say, hey, I'm thinking about, a lot of this is pet photography. I'm thinking about partnering with SPCA and I'm going to do this kind of shoot. And we help them structure it to get something out of it. Now, for example, in our photography for pets, a lot of them will either have the people, they'll be maybe at the SPCA doing shoots for that day. And with that, they have brand awareness because they have their logo and they're meeting new people, potential future clients, and they're taking a picture and they're doing that. But the people could pay directly to the SPCA for it, not her, because that's income. When someone gives you money, that's income. You can't give it away. There's no donation. So it has to be an expense. And so then the cost of doing it, like maybe she had a banner made and some flyers made and stuff like that, that cost could be advertising and promotional. I would say professional. But the money coming in, you don't want to be handling that because then you guys start worrying about sales tax because it's income. It's not, people cannot donate to you. You are not a, oh my God. I'm like, brain. You are not a 503c, which is a registered charitable organization. And we're going to talk about something else on this too. So an in-kind service, so shooting to a nonprofit organization, and they said an in-kind service means that you did a fair swap and there is no deduction. But there wouldn't be a deduction anyway. And you can never deduct your time. Your time is not a deduction. Now, but all this can be handled on personal. So there is something for mileage. In fact, there's donation mileage, like charitable donation, not mileage. So if you drive to do something, you can actually claim mileage for that stuff on your personal tax return. What I want to say is like things like GoFundMe, any of these types of things where people are like, oh, help me out. And you absolutely, out of the kindness of your heart, you should do that. But none of that's a deduction. You can only deduct things that are given to IRS registered charitable organizations. And you can only do that if you don't receive anything. So do you ever notice how when you donate money to, I don't know, if you go to a gala or something, right? You're buying a ticket to an event and yeah, they're raising money, but you're actually receiving a ticket to the event and that's a thing. And so that's not really a donation. So if you receive something for the money, and if you realize it's a lot of TV things, if you donate now, we'll send you blah, 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 blah. It's not a donation. And so you need to make sure they're registered because that cannot be taken. I'm actually going to grab my blog post here because I have an entire blog post on donations and there's a link in there that goes to the IRS site where you can look up the organization to see if they're a registered charitable organization so you can deduct it. Now, I'm diverting way far from your question. You're probably like, Tiffany, get it back on the rails. Yeah, you can never, donating your time is never a deduction. The only thing you can deduct is your cost, but you want to make sure that your cost is some kind of advertising or something because you're getting brand awareness out there doing something, right? You're in the community doing it. But the biggest thing I want to stress here is you cannot take donations. You are not a charitable organization. So a lot of my clients will do this. They'll like do these Christmas minis and they want to donate to a women's shelter. So they can take the money, but they're giving the client something as well. So that's not a donation for the client. It's not a donation for you because you are receiving income and you can't deduct donations because there's no line on a Schedule C or an 1120S for donations because there's no such thing. So you have to keep track of that outside and then you can take it on your personal tax return. But that means that donation that you took out and you gave is going to be an owner draw and then counted for on your personal return, or work something out differently where the money goes, or for example, instead of a donation, it becomes an expense. So maybe it is like in that case where you're doing your own shoot and then you're giving the money to a foundation, you can't do that. But let's say you structure it differently and it's like, I'm doing this event for a charitable organization and I'm set up there. My brand is there. I'm meeting new people. I'm networking. Then that could be a donation of that cost for that could be, and the money that you give them as a donation is really advertising because you got to spend the day there, creating brand awareness and stuff. So I'm going to leave it on that because I could go on this for days. I'm going to grab this blog where I break that all down for you. But that's a huge thing to know. Again, it's also in the sales tax, the business expense guide, the things that people think are donations that are not. And here we go. I'm going to grab that. I'm going to copy that here. And then, you guys, I'm going to hop off here, but I'd love to answer any last questions. If you were here live, thank you. If you've been here the whole time, God bless you. Thank you for staying with me. I hope we made a dry topic exciting and interesting. But that's what I'm here for. I want to help you guys. That's what I created this group for. And so I hope that you join me each Friday on these lives, or at least get your question in the live thread so I can answer it. Also, make sure that you get my weekly newsletter where I address a lot of these things. As we're in quarter four, a lot of my newsletter is going to cover all these different deductions and non-deductions and things you need to know for tax time. And again, if you are interested in having Bastion Accounting do your taxes, we are going to be opening up sort of so many seats for the season to take on some more photographers just for taxes. But if you're looking to work with us in any capacity, bastionaccounting.com, go to services. We do business formation, any kind that you need. The pricing is all on our website, and that includes all the state fees and filing fees. We do QuickBooks. Our packages on the services page is where we set up your QuickBooks Online. We bring everything in. We get it compliant. We review everything for sales tax compliant. We help clients register for sales tax, track and pay all sales tax. We do all the W-9. We get all the W-9s for you for anybody. We monitor all your transactions, and we find if somebody needs a W-9, we actually get the information from you, and then we get it electronically from the person. We file 1099s. We do payroll. I'm trying to think of all other things. We handle it all for our clients. And so if you think that you want to work with us, or that you're like, I need help, please go to our website. You can go to services. You can fill out an application, give us some information about you, and you and I can jump on a free quick discovery call. If you're like, hey, I just want to pick your brain one-on-one, I can do that too. We have a 30-minute consult on there. So I'm here to help you guys. I hope this was beneficial. It was long, but I feel good now. My coffee's gone. It's time to refill. And I hope you have a beautiful, beautiful day and a beautiful week. And I will see you guys next week. And yeah, I think that's all I have. That's all I got for you. Oh, I guess one last thing is we're here now, but make sure you follow me on Instagram at Bastion Accounting. Okay, that's my handle at Bastion Accounting. I'm going to be doing some really fun stuff over there as well. All right, have a wonderful week. Bye. See you next time.